A couple of months ago, David Tepper, the guy on the screen from Appaloosa Management, said to buy everything when it comes to China. Of course, then we've got the Q3 13F, and we saw that, well, actually, he said buy everything China, but he didn't really buy everything China. He already had positions in Alibaba, JD, and all of that, but they didn't really add that much. I also think he actually reduced Alibaba a little bit in Q3. But now we've got the Q4 positions, and it does seem like he did what he said. He did what he said. So let's discuss all of that and why I still believe it makes sense. Let's actually look at the changes, the buys and the sells, because he did sell out of a couple of positions. Now, if you don't know Appaloosa Management or David Tepper, well, it's basically this. They have 13 stocks in their portfolio and a portfolio value of just over $6.4 billion. Now, I mean, I say just over as if I'm talking about $640. No, $6.46 billion, 37 positions in the portfolio, but as you will see, the top 10 is already the majority of the portfolio. So before jumping into this, if you enjoy this type of videos, hit all the buttons. We're of course going to review all the other super investors as we do each and every quarter, but I'll have to wait. I think it's going to take another couple of days until we've got all the other 13F released, and then we'll do just the main video. So if you're interested in all of that, like, subscribe, we really appreciate that. On Tuesday, we're going to have Shopify before the market opens, Supermicro after the market opens, and then as always, noon live stream with Jose each Tuesday and Thursday. So stick around for all of that. If you want to support me even further, do check out the link down in the description. Any other pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's start off with the selling activity for Q4. The first one here just made me laugh, one share of Google Alphabet, which was quite funny. Then he reduced FedEx by 6.67%, Oracle, big trim here actually, 11%, did reduce Lyft, 14.29%, quite strange, right? Because I made a video about Lyft not so long ago. I think it was flying under the radar. There was an announcement today with regards to them launching actual autonomous vehicles in 2026 in partnership with Mobileye, and they will report their quarterly earnings on Tuesday as well after the hour. So I'm definitely going to cover that. And then look at this big reduction. Amazon 18.75%, Meta 21.6%, TSMC a reduction by 37.5%. Wynn Resorts, it's the casino, a reduction of 37.5%. Same with the other casino. Las Vegas Sands by 41.1%. But of course, small change here in the overall portfolio. He reduced Intel by 60%, completely sold out of Adobe. Completely sold out of Adobe in Q4. And just an FYI, yeah, this happened in Q3. So in Q3, he actually reduced Alibaba by 4.76% and already did reduce a little bit with regards to the big tech companies, Amazon, even Uber, Intel, Micron, and all of that. He did reduce already in Q3. So he's just been reducing a bit more in Q4. So what exactly did he buy? Well, he increased his position in Vistra by quite a lot, 112.5%. Okay, I mean, Vistra last year, if you remember, was one of the best performing stocks in the market, outperforming even Nvidia. Again, it makes sense, but I'm quite curious as to why he increased it by so much. And at the same time, he sells positions like TSMC. Not completely, but did reduce by, I mean, quite a lot. So, okay. And then he adds 106.4% in ASML. And remember, these are Q4. So it's not something that he did last week or something like that. No, that was Q4. Okay, do with that what you want, because it can very well be that as of today, as at the time of recording, he is selling shares of Vistra or ASML. It's true that ASML was, as we've seen in the past, was cheaper than usual. So, okay, he bought the dip in ASML. NRG, he increased that as well. JD, he increased JD by 43.37%. Lam Research, I guess he's watching the channel, increased that position by 25%. And then as we've seen here, QUEB, that's basically an ETF for Chinese stocks, increased that by 21.53%. Alibaba by 18.43%. And I mean, you're going to see Alibaba is actually his largest position in the portfolio. So he kept on adding to Chinese names. So truly he did follow his own advice of a couple of months ago, buy everything when it comes to China. Then we see here Micron, he did add to Micron 14.29%. As for the rest, what we have here, Nvidia added a little bit, Baidu Re-increased in Uber. Okay, makes sense. I see he's also now a bag holder of Advanced Money Destroyer. That's also nice to see. And after selling 2 casino stocks, well, not completely, but reduced, we can see that he actually added to Caesars Entertainment. Interesting. And then he adds 1% extra for Pinduoduo, and he opened a new position in this company right here. And according to Google, this is an American multinational technology company that specializes in specialty glass, ceramics, and related materials and technologies, including advanced optics, primarily for industrial and scientific applications. Okay, interesting. It's probably a very, very strong company. Its CEO, it's the same CEO since 2005. Let's actually have a quick overview of this company right now. So as you can see, in the last 10 years, it performed quite well. It's up 187%, has a market cap of $43 billion and a forward PE of 22.6 times. Expected to grow, sales growth, okay, mid-single digits, and then EPS growing a bit faster than that. If you look at some pricing multiples and compare it to the 5-year mean, it's actually more expensive today. So, okay, quite interesting pick. But I assume that with the dividend sitting at 2.11% and has grown quite nicely in the last couple of years, I think that might be the play here. Moving back to the main portfolio. So this is basically it. You can see here the main positions and who's number one here. 15.54% of the portfolio is Alibaba, by far the number one position here. Number two is Amazon. Keeps on reducing it a little bit, but it's still the number two. Pinduoduo, number 3 here at just over 8%. Then we've got Microsoft, remains untouched. Vistra made its way up here at 5.76% of the portfolio. Then we've got JD, 5.61%, Google, Alphabet, Meta, Oracle, and then we've got FXI here, the large China cap ETF. And actually Lyft is still high up there. He did buy it, bought more actually in Q3, reduced it now in Q4, but it's still high up there in the list, all things considered, right? If we have to go back down here, we see Nvidia 1.41%, Lam Research 1.4%, Uber 1.4% as well. And then we see Intel here all the way close to the bottom at 0.31% of the portfolio. But all in all, it makes sense. It makes sense. He's very much betting on the fact that we're going to see a re-rating of Chinese stocks, meaning they're finally maybe going to get a higher premium compared to the American counterparts. Maybe now that Trump is president, maybe that we already have those tariff talks ongoing. Let's be honest, the tariffs that have been put by China and that might be put by the United States are not that bad, right? 10% here, 15% there is really an uncertain certain industries. It's really not the end of the world. And so maybe that's why we're also seeing some strength in those Chinese names, especially since the start of this year. We've seen that we've compared it to American companies. The big tech companies have been lagging behind, especially since the start of this year. Companies like Alibaba, which I personally own, are up quite nicely, have outperformed the market actually as of today. A lot of things can change throughout the year, but I do think it makes sense. He's a very, very smart guy, amazing track record. He's very aggressive when he goes into things and his ideas, very aggressive, but at least, if he says something, okay, at least he does it. So I am not surprised to see his Chinese positions here increasing, especially not towards the end of 2024, going into 2025. It makes sense. It makes sense. Very, very much concentrated in Chinese holdings. But on the flip side, if you look, he still owns Amazon, Microsoft, Google, and Meta, and even Oracle here in the top 10, top 15 positions. So it's balanced, but you can see that he's very much willing to put more weight on the Chinese names. And it makes sense. I've said this at the end of 2024. I think that's the contrarian trade for 2025. I know a lot of people have been saying this for a couple of years now, and they've been underperforming the market for quite a long time. But with the elections, with the way things were looking, especially for these companies, these are amazing companies that are growing, that are profitable, that are just extremely cheap. Yes, there is that China risk. There's also geopolitical risk and all of that. Yes, we have to take that into consideration. But as we've seen, American stocks are not immune to those things either, right? DeepSeek completely wiped out, hundreds of billions, if not trillions of dollars of market value in just one day. Then tariff talks, Mexico, Canada also, paf, wiping out billions of dollars, hundreds of billions of dollars in value in just one day. So it's not just, oh, China risk, geopolitical risk, and those values, those stocks can go down quite a lot. No, the American ones as well. So all in all, that's about it. It's nice to get insight in those super investors' portfolio. Unfortunately, we don't really get much information or much explanation as to why they buy or why they sell. Yes, when they go on TV and they say things like buy everything China, or maybe afterwards they explain why they increased, why they opened a position, why they decreased, why they completely sold out. Yeah, that's maybe when you get an explanation, but right now we can only look at what they've done a couple of months ago, try to make sense of it, and then agree or disagree. Me personally, of course, I agree with his moves. I think the portfolio makes total sense. Of course, I'm biased, but yeah, we'll see how that works out. I'm very interested to see what the other super investors have been doing, if they're also pivoting towards more Chinese names in the portfolio, if they have been reducing their exposure to, well, the American Magnificent Seven, if they've been buying some under the radar stocks like Lyft. I mean, a lot of people laugh about it, but I do still think that Lyft will outperform the market. I thought Snapchat would do the same, but apparently Snapchat is still the only company that can go up 12% after hours and then be down 7% the next day. This is truly, truly amazing. So all in all, that's about it. I have actually an exciting video in the next coming days with regards to waste management and two other stocks that have also outperformed the market by quite a lot in the last couple of years. Boring businesses, I would call them, but pretty good ones to own. So stay tuned for that. But on Tuesday, it's Shopify, Supermicro, Lyft, and the usual live stream with Jose. So make sure you're subscribed to the channel, and I see you all in the next one. Bye-bye.